All right, welcome back to the channel, Crypto Trend Trader, with our well, it'll be our early week market update. Decided to postpone for a day. Probably going to keep this one relatively short, also as my voice is a little taxed from the weekend. Definitely enjoyed the fights, but before we get started, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So let's just do our typical rundown, and we'll just keep it flowing. Starting here with the 10-year Treasury Yield, you'll see we did get the exact move down to our Fibonacci level, found support. We're seeing at least a reflex rally for now. I would expect it potentially to bounce somewhere as high as like 1.33, maybe 1.56. But in all actuality, I don't expect a ton of decisiveness in one direction or the other with pretty much anything until at least Wednesday. Everybody's going to be hinging on the Fed and what they say. So, but in all reality, we still have these same valid areas. Most importantly, what I'm paying attention to is our yellow 0.5. If we break to the downside, that's going to take us down here to like that 1.13. Also, we have our, obviously the red fib level here, but the 786 is still our target to the upside. I don't think it's unrealistic to think we could get as low as like 1.0 and come down to our next substantial fib level. I'm not convinced that that's going to be the case, but it's definitely a possibility, and I'm keeping my eye open for that. So, but I suspect, probably some of those numbers coming out lately have just been a little too high. I think the Fed's going to start like letting off the gas a little bit here, or at least talking about letting off the gas, maybe coasting for a little while. So DXY went to zero. Everyone else was right. I was wrong. So I admit it. The dollar is officially worth nothing, and it completely, oh no, it didn't. It did not crash to zero. Never mind. The dollar is finding support exactly where I said. We are bottoming out here. We have crossed the 8 and 21 back to the upside. We are getting ready to retest that yellow, what was support that turned into resistance now. We banged our head on it basically back here, again here, and now here we are a third time. I suspect this time we'll probably chop around here a little bit, maybe retest down to like the 90.27, and then we'll see that move back to the upside. We're going to have to chop through the 50, the 55, and the 89, so it's going to be tough resistance overhead. But I don't think it'll be too long before we're up here in like that 91.5 range again. You'll see we have all green histograms in a row. We have clearly crossed above the red slope line. Very clearly got the hard buy signal coming out of the bearish control zone. I'm going to shift over to the longer time frames here on our weekly. You can see, the last couple times we went inside of the bearish control zone, got the hard buy. That was our top right here. We got a little bit of follow through right here, and now here we are essentially like starting to carve out a bottom. But just like we spoke about, we basically have one drive of bullish divergence, a second drive of bullish divergence, and now here we are putting in our third drive. Typically after the third drive, you'll see like a push to the upside. This is basically, this looks to me very likely that we're at least coming back up here to like that 92. But again, I don't want to get too excited on this. I still think there's definitely a possibility for downside potential on the dollar. But as far as I'm concerned, if you take into account what's really happening here and remove all your bias from it, going back to December of 2014, like put everything aside, what everyone is telling you, what you believe, what you want to believe, all that. And in all reality, this is where we're getting play from. We're in a giant sideways channel. There's no way you can say anything else. We've been inside of this channel since 2014. So more than likely, if we've been going sideways in this range for 7 years, more than likely, in my opinion, we will continue to go sideways inside this range for 7 years. Like, once we enter this range back here, I'm sure everybody, after we topped out here, after we bottomed out here, everybody says, we're going to top out here or we're going to break through. Everybody says we're going to top out here or we're going to break through. But more often than not, when you're inside of a range, you continue inside that range. So in my opinion, the best and the safest and the most reliable call is that we will continue to chop around inside that range until we don't. So more than likely, in my opinion, the dollar has pretty much only up to go from here. If we break down from that range, I'm glad to admit that I'm actually wrong. And you know, at that point in time, I'm sure we'll see a bunch of weakness and everybody will be screaming about how they're right and the dollar's going to zero, just like they are now. But I just don't see it happening. We have the 200 exponential and simple on the monthly here. We are clearly inside of the bearish control zone. Every time previously we were in the bearish control zone, we got at least a nice strong reaction rally out of the bearish control zone. So I think more than likely what we're going to see is another reaction rally outside of the bearish control zone, also corresponding with, you know, maybe we even get a pushback down here as low as like 87 and take out that low. I think it's less likely to happen, but it's definitely a possibility. You'll also notice here, obviously, we have a low here, and then we have the same low or lower low. We have a low here, and then we have the same low, you know, or a lower low, and then we have a low here, and then we have basically, you know, a slightly higher low. So, you know, I honestly think we're just going to get a reaction rally out of here. Everybody's super excited thinking that we're going to break. It's a very strong support zone. And, you know, when something goes back for 7 years and is only acted as support, I suspect it's probably going to continue acting as support. New all-time high on the S&P. We are continuing to build some serious bearish divergence. You know, new high with almost no energy spent. So maybe we get continuation to the upside. Maybe not. We'll have to see. I think more than likely, you know, the trend is up. We're going to continue going up until we don't. So, you know, but we are, I mean, we're at basically like spent level areas. We're back at 95 now. Every time we've been up in this range, you know, we basically have topped out. Now, when we topped out, though, we basically have just chopped sideways. So just because we're running out of steam does not mean that these markets are just going to top out and start dumping. Same thing with the Dow Jones. We're up here. We did not put in a new high on the Dow, but again, I think we're just going to chop around inside this channel. You know, we have support down here at 33,800. We have resistance at 34,800. So I think we just chop around inside this $1,000 range. Hard sell, bunch of red histograms. Looks like we're probably going to lose some strength here. But again, I think everything is probably like teetering on the words of the Fed for Wednesday for that meeting. So IXIC, NASDAQ, we got the exact move, just moving our way back to the top, still inside of a bullish ascending triangle. It is a bullish triangle. More likely than not, it will break to the upside. Does it break here when we come up to it? Does it come back down to the bottom of the range? You know, again, same type of thing. You know, we're at very high levels on our like momentum indicators. More than likely, we will probably be topping out here. But again, that does not mean we just have to like sell off and go to zero. More than likely, what's going to happen is we're just going to continue to develop bearish divergence. You know, if we look at this point right here, we look at this point right here, and we look at where we're at right now, you know, there's nowhere else to go up. So is it likely that we're going to take out this high right here and invalidate the bearish divergence? No, it's almost impossible. So at this point in time, it looks like we're going to have one drive of bearish divergence, two drives, and then now here we're going to put in a third drive, at which point in time, maybe we invalidate the pattern and break down from the range, and we see, you know, something more like this come down here and finally hit our target. But, I mean, we were almost to the 0.5 here. You know, how greedy do you really want to get? Maybe we get down to like 11,871. Maybe we don't. You know, there's really no reason at this point in time to get overly bearish on these markets until we start to see a move take place. So, and again, that's all going to be hinging on whatever the Fed says. So, Russell 2000 back up here, retesting that all-time high, very clearly in the bullish control zone, starting to show a little bit of weakness. But, you know, the Russell is just, it's just a cyclical little trade. You know, I think honestly the indexes are going to be less valuable, and it's really just going to be more and more of a stock pickers market as this continues in one direction or the other. ICLN, you know, we have broken out of this resistance slightly, but basically are just chopping around sideways. I'm still not like overly excited about this yet, but it looks like we're probably going to get that move at least up to like the $25 range. Nice little 10% move. All of the well, first we have the XLE doing just like we said, starting to show some weakness in here, probably going to be selling off. One of the more strong energy is like one of the more strong indexes. It looks decent. XLI looks terrible. We spoke about this. We'll get into Caterpillar and Deere, and you'll see that just like I said, they both have dropped out of that gigantic channel, that ascending channel they've been inside of, and they both have had like over 10 to 15% dumps, just like we were expecting. I expect XLI, we got the 821 cross right here on the daily. I expect follow through to the downside on this. Everybody's pumped about the financials, talking about how they're going to the moon and it's all bullish and everything. XLF looks like shit. Also, 821 cross to the downside. Hard sell signal. A bunch of red histograms in a row. Again, we're going down. 36.41 is my next target, after which maybe $35. We'll have to see. Looks like trash. XLU utilities look strong. We basically got that break. Nice trade so far. Looks like we're going to very reliably hit our measure move up here at that 67.42. Hard buy signal, all green histograms. We broke through a descending channel. Looks good. Looks good. We came back down, got the retest. Everything looks good. This week has really just done everything we've been speaking about for the last like 2 weeks. I mean, I honestly can't be mad. Even MicroStrategy did exactly what we said was going to happen. Obviously, I did not take that trade because Michael Saylor is a scammer. We'll get into that in a little bit as well with his new MicroStrategy LLC and why he did that. U.S. oil is next, powerfully moving to the upside, still strong. Tons of momentum, bullish control zone. It looks like we could roll over, though. We have to be careful with this one. It's definitely in like the topping range. Definitely looks like it's getting to a top over here. So we will have to see definitely what's going on there. So let's jump over to tech next. Tesla, once again, man, just so weak. It's unbelievable. You would think this thing would get a burst back to the upside, but I don't know if people are still like traumatized or like everybody that likes Tesla is like just stayed in through the dump and has just gotten hammered, so there's no more money to put into it. I really don't know. At this point in time, we're just basically oscillating inside of our like little mini triangle right here. I do expect this. It looks like it's going to break up to the upside. It's a profitable trade for now. It's not. I really thought this was going to perform a little better than it did. I mean, we're up right now like 7% on the position, but I'm not like overly confident in this either. We did get up to our target last time, but the longer it takes to get there, the less reliable our target is. I think more realistically, we're looking at something closer to like 670 and like 700 maybe out of the cards, or maybe we'll get a wick up there. We can close our position and get out. Looks okay. Doesn't look great. We're definitely getting a reaction, like a little bounce on the Stokes. Crossing over the slope line. It's still blue. A bunch of green histograms in a row. It doesn't look bad. I expected more strength coming out of here, honestly. Or expect. Pinterest still looks okay. Still moving to the upside. Chewing through all these moving averages. Back inside the bullish control zone. This was, essentially a bullish reset. We basically like crept up, kind of went sideways. I still think we'll get up here to like that $81, $82. But again, we've chopped through all the moving averages now. We're up above everything. So it's basically just some resistance left back here from before. But again, we're still inside this pattern. So I do expect this to top out right around $80. eBay, we got the exact move we talked about. This is why I do not like to buy a breakout. When you buy a breakout on a position like this, it almost always comes back down and retests the breakout level for support. It came down, it touched our breakout level perfectly. It found support as of now. So I will be looking for, obviously we did not get down as low as I was hoping on these positions here. So, obviously that trade just never happened. But it is what it is. I'm not going to chase it. But at this point in time, I think you could probably, not to be too conservative. You guys know I'm a conservative investor, trader, etc. But, based on the levels we're at right now and starting to show some weakness and everything, I really want to see this develop just a little bit more. I think reliably I could enter a position off of this level and get a pretty solid risk-reward ratio on this. But again, I would rather just let it develop just a little bit more. But in all reality, 5 or 6% stop loss. That's at 4. We could have a slightly higher stop loss, or lower, I should say. Realistically, if it gets back down here this low, back down to like 61, 62 bucks, I might start I might start rethinking this. But in all reality, it's 20% move to the upside for the measure move of the triangle compared to a 5% stop loss. So it's still a 4-to-1 that this holds, and this is a confirmed breakout. There's definitely a possibility it will turn into a throw over, but I would expect this area to hold. So in all reality, depending how you look at it, at this point in time, I think we have a solid support zone right here. So if we come back down to the top of the triangle, I would expect it to chop sideways, let this bullish reset take place where the indicators and oscillators just kind of cool off a little bit. Price action just kind of goes sideways. Maybe we get a wick down, and then we can take an entry after this has reset a little bit. But this is probably going to be one of the entries for the trade of the week this week. eBay looks good. Confirm breakout, retest. I don't like that this is such a bearish candle, and we took out basically like the 3 candles before it. But as long as support holds, that's more important to me than anything else, honestly. Candlestick patterns or like a specific candlestick is good. I like it. It gives you a clue as to what's going on. But in all reality, I think support and resistance are much more reliable, and moving averages as well. So PayPal. PayPal looks good from that breakout zone. Still a good entry. Again, we're just kind of creeping up here. It's not like going nuts or anything, but showing only strength inside the bullish control zone. Still expect that potential move up as high as like $309. Another like 10%, not quite. Yeah, about 10% back up here, and then we can pay attention to our higher targets if we take out that high, etc. But as far as I'm concerned right now, I think more likely than not, we're going to see an internal retracement. This is really the area to get through. If we get above this like 278, like 280 range right here, there's really nothing stopping us from coming back up here to at least the 786 or 886. But at that point in time, I'll be watching it to make sure that we're not going to like top out. But again, PayPal looks good. Bumble is outperforming. I mean, this is definitely, basically took this trade perfectly at $40. Here we are over 51. So it's already up 25% in essentially 2 weeks. Beautiful, looks great. Hard buy signal. Stokes look good. All green histograms, blue slope. I mean, Bumble's killing it. Could we start taking profits here? Do we want to potentially take profits at the 57 resistance? Was that the bottom and we continue moving to the upside? I don't know. We'll have to wait and see. But as far as I'm concerned right now, it's extremely bullish. We got the 821 cross on the daily. So, we basically nailed the bottom perfect on this one. So remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research, trade responsibly. But obviously, congratulations to anyone else who got in this trade as well. Baidu, not really doing anything, just kind of hanging out at our entry point right here. This looks a lot to me like we're just doing a little bullish reset situation taking place here. We got the hard sell. It's going sideways, while this resets. So I'd like to think eventually we'll see some kind of strength come in here. But this is also like, this is the Chinese economy too. So, it's a couple months ahead of the U.S. economy or the world economy. So we'll see what happens with this. You know what I mean? They dealt with the shutdowns and all that stuff first. So whatever happens over there, I think is probably like, a couple month like peek into the future, what's going to happen in most other countries. So that's why it's so important, I think, to not only like buy all American stocks or all European stocks or all Chinese stocks, but to diversify not only in sectors, but also in like, geographical locations as well, because there's definitely a possibility these things underperform. There's also a possibility they overperform, but I still like these trade setups. I'd say I'm still confident in the direction overall, but again, it's not exactly like overperforming like, oh, thank God, you know what I mean? Same with Alibaba. Alibaba looks good. Basically just at our entry, like to see this play out. Like to see some strength come into the upside. We're obviously getting the hard sell. We're just kind of just chopping around sideways here. Still got the blue slope line. Still managed to get a green histogram. Again, I mean, this isn't like overperforming by any means, but I like this entry. We got a nice entry at a key support on a longer time frame. I like the way this chart looks. It's very like technically looks good technically based on like a 5-wave Elliott wave structure. Buying this support here. It's a very key support level. But again, we'll have to see. Neo is the one that's really overperforming. Really sucks that we missed the entry on this thing by like a freaking dollar. But it is what it is. Again, I'm not going to chase it. I do expect it to get up here to just over $50. So it's almost there now. I expect it to get there, at which point in time, we'll have to pay attention to like the longer term, potential targets back to the upside. $67 is probably, I mean, realistically, if it gets to 50, it's probably going to 54, at which point in time it's probably going to be up at 67 before long. technically and fundamentally looks good. But, you know, I'm not going to chase it either. So if we break out to a new high, come back down, retest, I'll probably take a position on that later down the line. It'll also give us a little time to see what's going on, like economically around the world, etc. So Peloton, you know, still overperformed. I did not expect it to come back up here and break through that support level. It broke through it, came back down, retested it. You know, so what was resistance, it broke through and then found support again. I think more likely than not, this thing sees continuation back to the upside. It looks like basically a breakdown, you know, and then it found support. Obviously did not get the measure move, did not find support at any key Fibonacci level or anything, you know, but overall looks strong, at least in the short term. It's holding. It's trying to get above the 200 exponential moving average, 200 simple moving average rather. I don't love it, but technically it looks okay. I'm not interested in it though. I have no interest in it. If it takes out this 123, 124 level right here, I think it gets much more continuation and probably retests the all-time high. But again, I have no interest in it. Apple looks strong. See, this is the type of move you want to see come out of something. This thing's coming up right now, retesting that very key resistance area. Again, this thing's really got to get above like 136 before I can get like overly bullish on it. I like it. Looks solid. There's definitely potential that it's topping out right now. I think more than likely, honestly, there's a lot telling you this could easily get continuation, but I think it's going to roll over. I don't know why. Just the way the price action looks, we're at a key resistance. The knife is like through the roof right here. You know, we're at basically an area we would run into resistance where we have a bunch of green histograms underneath the blue slope line. A lot of times that will get rejected and roll over there. It could very easily just break out here and continue to the upside. But I don't think that's going to happen. But again, that's just my opinion. Technically, it looks good. That's a nice bullish candle. Broke through all the moving averages, you know, according to the actual chart and what it's telling us. In all reality, I would expect Apple, you know, realistically to top out as low as 133. Could easily get up to 138 or 141, at which point in time it's probably going to new all-time highs. There's quite a bit of resistance here at that 786 at like 138. If it breaks through that, I think more than likely it's just gonna keep flying. So, but tech, I think tech sector overall is the most dependent on low rates. So, depending what happens with the you know, 10-year, etc., probably will determine what happens with tech. So. Let's jump over to crypto and then we'll do our commodities. And like I said, I want to keep it relatively short today. You know, we're getting that exact move we expected off the futures chart. I still 100% expect us to come back up here and test that. Remember, we got a bunch of green histograms. We got the hard buy. Everything looks great. You know, we're still expecting that exact move. What was the exact move we spoke about? Trying to avert the 821 cross on the weekly. It also lines up perfectly with the 0.5. I still expect Bitcoin to go up to at least 43,500, somewhere around that range. We could very easily get a big rejection candle up higher. We could very easily get above there, close, cross this back over, and see continuation. I'm not going to get overly bullish or bearish on this situation, but to tell you the truth, for anybody that did not get out of a position, did not take profits, that doesn't feel overly confident about the market, I think somewhere between, you know, 43.5 and probably 48,000, there's going to be a ton of resistance and a ton of people trying to exit positions, either in profit, break even, or, you know, just selling into the rally. We chopped around up here for a long time. We are very close to essentially putting in a like strong technical head and shoulders pattern. We have a very clear left shoulder neckline, head, neckline, right shoulder now coming up here, and that lines up perfectly with the 0.5 Fibonacci retrace, lines up perfectly with the 821 moving average on the weekly, lines up perfectly with the top of the left shoulder. We've got our bearish divergence signal, sell by sell at the top of the range, all red histograms on the weekly. We've crossed the slope over red as well. You know, every technical thing tells me at this point in time this is a dead cat bounce reaction rally. We are coming up here, and that this is going to be a liquidity event where everyone sells into the rally. Smart money. I'm sure there will be plenty of moon boys. I'm sure every channel will be talking about how the bull run is not done, and you're going to start hearing targets like 60,000, 70,000, quarter million, and from like the actual technical traders, you start hearing them talking about, what was our target again? It was like 5.5 billion or something. I can't even remember. Bitcoin spot market, it's exactly the same. We're getting 821 cross to the upside. We're running into 200 exponential, 200 simple just above it. We've got all the moving averages above our heads going to act as resistance. We have crossed over, bunch of green histograms in a row. We have the blue slope line. We've got a very powerful bounce at what could have been a Stoch cross to the downside. Instead we got the bounce. We're moving up. Looks good overall for at least some continuation. Again, that cross is directly above our heads here. I 100% expect us to get up to like 42.5 to 45.4, somewhere around there, but would not be surprised at all if we got up as high as 50,000 on spot markets. Again, extremely bearish on the weekly. Extremely bearish on the weekly. This is literally a reaction rally, dead cat bounce. Anything less than a new all-time high on this rally, I don't care how high it gets. If we do not put in a new all-time high on this rally, this is extremely, extremely bearish. Extremely, extremely bearish if we do not put in a new all-time high. That is my honest opinion. And I will not change my mind if we get up to $63,594. You will not hear me talking about why all of a sudden it's bullish now. It is extremely bearish. We would just literally be putting in a lower high, which is like the end of the trend after a 50% dump, reaction rally, etc. So Ethereum, broke down from that level, still did not take out the low though. So that's good. So we have a low, we have a higher low, we have another higher low. Got the hard sell signal, rallied off of that. Decent amount of green histograms in a row. Looks like we're starting to build a little strength to the upside. Bunch of moving averages we got to chop through. I would not be surprised at all if we got back up to 3,000 or 35.75, potentially even as high as 4,000. If we start getting back up there, again, we're looking to take out that all-time high. This, after a move like this to the downside and a bunch of moving average crosses and a bunch of bearish stuff and topping out potential patterns, which we'll get to, like market cap dominance, Bitcoin dominance, and we'll also get to total market cap, and they both look extremely bearish also. On the weekly, sell by sell, divergence signal at the top of the range, bunch of red histograms, looks like crap. If we get above right here, that 2600, we're back above the 8 moving average, come back up here, start testing all-time highs, hey, I'll be the first one to tell you I've changed my mind, but right now, looks bearish. Looks bearish. Dogecoin, just chopping sideways, even more bearish. It's showing like no strength. I think people, these cult coins or cult stocks or whatever, the money just shifts around them. It's basically like, it's a struggle to try to keep Dogecoin pumped up while GameStop pumps up, while AMC pumps up, while Bed Bath & Beyond pumps up. It's just a rotation between like the meme stocks, honestly. Dash looks like shit. Anybody that bought Dash, I feel bad for you. This is probably like the worst chart in crypto, or one of them at least. Basic attention token still looks extremely weak. Seeing no life out of that. Bitcoin dominance chart on the weekly. So far it's doing exactly what I spoke about. Every time we've come down here to the bearish control zone, we got the hard buy signal. Even if we saw a dump back afterwards, we saw continuation to the upside. We saw continuation to the upside. We saw, every time we saw a dump back down and then continuation to the upside. So here we got the cross. We saw a dump back down, continuation to the upside. I still think it's very likely that we get back up here to one of these other key levels. There's tons of resistance along the way, though. It's not going to be an easy trek. 50% next. Then after that, 53%. Then after that, 58%. We could top out at any of those places. This is the weekly chart. We got a hard buy signal about to exit the bearish control zone. 2 green histograms in a row. This to me, the second we break through that 8, we'll be up here at the 51%. This looks like Bitcoin is going to only gain dominance from here, with the exception of some chopping around in the middle. So that is bearish for altcoins or bullish for Bitcoin, depending on how you look at it. Total market cap on the weekly, did exactly what we said, came back up here, retested the 8, finding resistance here. Again, what we don't want to see is this pop back up and put in a lower high. It's going to be tough to gain that kind of momentum again. This thing topped out at 2.56 trillion. We're at 1.6 trillion. It has lost over 1 trillion. It has lost like over like 40% of the overall value. We broke down from the slope line. It's all red histograms. We have the bearish divergence signal, sell by sell at the top of the range. Again, on the weekly, looks like total shit. Crypto looks like shit right now. So, but I do expect more upside temporarily. So, Coinbase, that trade looks great right now after we gapped up. I was starting to get a little sketched out, but obviously this is working out extremely well. From the entry point, we're not up anything notable at this point in time, but just like Bumble, it looks like we picked pretty much the absolute bottom. So it looks good. Got the breakout of this descending channel. I expect continuation. We broke through the 8. We did leave behind a gap right here at 224. So I think it's realistic. If you miss this entry, you could probably get a new entry on that gap fill close. Even if we don't close the gap completely, I think that we'll get at least like some kind of pushback down to attempt to close the gap. But, you know, that could easily get bought back up. But I do look at that as a buying opportunity. Our initial target for the 24% upside is 285. After that, it is the 37% upside at 313. And then finally, 55% upside at 354. And then we'll just have to pay attention to key fib levels. But, you know, basically just the 50% and the measure move of the channel takes us up to $299, which is like 30-something% move. If we just continue, that could be in the next like 3 or 4 days, at which point in time, you know, it may look like you know, just quick little scalp and I'm out. But honestly, again, I do like Coinbase because it's crypto related, but also is not necessarily correlated directly. I don't think long term it will be correlated directly with the price direction of cryptocurrency. I think as we go into a bear market in the future, it will see, you know, similar kind of stagnation as people are less interested in trading and they make less money on fees. But I think slowly the shift into custody is going to make them long term extremely bullish. And this will be like, you know, probably one of the dominant non-crypto related stocks, if that makes sense. MicroStrategy, we got the move up to our sell zone perfectly, gapped up very nicely. We can take an opportunity to look at this. Bunch of green histograms in a row. Hard buy signal. I did not take this trade. I do not like MicroStrategy. I do not like Michael Saylor, nor do I condone his behavior. Therefore, I will gladly just trade something else rather than buy into his piece of shit stock. What he did recently is a total scam also. Instead of issuing new shares into MicroStrategy, or raising money, basically under the name of MicroStrategy, he started a second company, MicroStrategy LLC. The idea behind that is if this new trade of $500 million that he puts into Bitcoin totally takes a shit, he can just close that company down, claim bankruptcy, and they can only go after the actual Bitcoin that was purchased with that like new company name, but actual MicroStrategy is protected. Therefore, his like $2 billion in other Bitcoin cannot be used as collateral to pay back the people that he scammed with his most recent Bitcoin purchase, or the one that's about to happen. But if he does succeed, if Bitcoin goes up, if the company does not go belly up, and you know, he does well, that's fine. He just has a second company, and there's no liability between the two. But anyone knows that if you're literally about to do the same thing, but you're starting a second company, it's to protect yourself from risk. So he's obviously losing confidence in this overall trade, in my opinion, or else why would he be so worried about MicroStrategy and their $2 billion in Bitcoin that he would not want them linked to the new $500 million in Bitcoin? That to me tells me he is 100% trying to protect his old company from his new fundraising. So to me, he's not confident. It looks like shit, and that's like a scammer move, 100%. That is 100% a scammer move. Potentially topping out right here. This is exactly where I would expect us to top out. We have this channel. We've been operating inside this channel since it topped out back here. I expect it to continue operating inside the channel. The knife is like through the roof. Stokes are potentially going to get up into the bullish control zone. We have lower high after lower high after lower high. Again, we'll see though. I mean, the 200 exponential and simple moving average, we're back above them. We're getting the 821 cross to the upside. Bunch of green histograms in a row, blue slope line. This could very easily see a breakout of this channel. I will not be participating in this breakout, but in the event that you do like MicroStrategy or Michael Saylor. Next target to the upside would be $930. It's a nice gain. Even if you took the breakout trade, which again I would not do, it's over 50% to the upside. So there's definitely some meat on that bone. I would expect some resistance around that 880 range, but if you break through that, in all reality, $1,000, 1150, and then after that, new all-time highs. But I think probably a lot of this move has to do with the new 500 million in Bitcoin that they're going to buy, and I think probably people are just stupid and don't realize that this has nothing to do with it, because this is MicroStrategy Incorporated. This is not MicroStrategy LLC. This is not where new Bitcoin is going. It is going to a completely separate company. So there's no reason for this stock to be going up. GME, GameStop, back below the 21. Looks like trash, man. Sell, buy, sell. That's our divergence signal at the top of the range. We have left the bullish control zone. We have only red histograms in a row. GameStop looks like trash. It did take out this high right here, which is good, but then it broke back down below it. So you really got to just see the direction this is going in. There's not a ton of potential here, but the breakout of our little triangle, we hit the measure move like literally within like $1. At which point in time we got a very bearish candle, followed by a indecision candle, followed by an extremely bearish candle, followed by trash. So at this point in time, I think GameStop is out of favor as far as the pump and dump trades. AMC looks much better. This is starting to, it looks much better, but still looks like, I can't even say it looks like shit. It really doesn't look bad. As long as it's just chopping sideways here while we kind of reset and showing a little strength, it looks like it's just cooling off. I think more than likely this thing just kind of goes sideways. It could very easily dump. It could very easily pump. I'm sure there would be absolutely no technicals behind it, nor would there be any fundamentals behind it. But this is just the type of stuff you got to look out for. Just a massive sell-off here. But again, I'm not trading any of this crap. If you are, by all means, congratulations. Bed Bath & Beyond, it does this every time. It gets a massive pump up here, and then just, there's nothing. Massive pump up here. There's nothing. I mean, it looks like shit. Bunch of red histograms, hard sell signal. Bed Bath & Beyond looks like crap. I think it probably is the technically strongest or fundamentally strongest of AMC, GameStop, and Bed Bath & Beyond, but it still looks like crap. Someone asked me to look at DraftKings. It looks like trash. We're getting a hard sell basically about to happen, leaving the bullish control zone. We do have a blue slope line right here, but it looks like we're topping out. It looks like it's getting ready to dump. It's finding some support right now on the 200 exponential moving average, but it could not hold the 200 simple. It is literally about to get a death cross on the daily. DraftKings looks like crap. It looks like it's topping out. If we chop sideways here long enough, maybe I will change my mind, but right now, not interested. And last but not least, let's check out our commodities, which are doing exactly what we were hoping and expecting to happen. Gold has been topping out back below 21, bouncing off the 200, about to get a golden cross here, potentially in the near future. But everything else looks extremely bearish. All red histograms, hard sell signal. Premiums were through the roof. We didn't even get up to our 1950 target yet. There's still very high potential that we chop here sideways and get that last push up. I do not expect gold to put in a new all-time high anytime soon. I will be very happy if I'm wrong. Silver, same thing. I do not expect silver to break out of the top of this pattern. It is still a very high possibility we get back up to like 29, 30 bucks. I don't think it will hold. We're seeing weakness. I don't think it's going to happen. Premiums are through the roof. If the premiums stayed normal, I think there would be much more demand, and then we would see potential breakouts. But because the middlemen are so greedy, I don't think we're going to see breakouts in this, because smart people are never going to buy like silver at 25 to 50% premiums. You have to be an absolute moron to be buying at those prices, or like a full-on like doomsday prepper. But if you're really that doomsday prepper-ish, I mean, buy bullets. Buy things that go bang. That's what you're going to need if the world ends, not silver. Because how are you going to stop them from taking your silver if you don't have something that goes bang, bang? Exactly. So the doomsday prepper argument does not really make sense. I don't think we're that close to a currency collapse. I don't think the world is going to end. I don't think that, this is the beginning of a new era. I mean, we're we're closer than we have been. But guys, you can't call end of like 50-year, 100-year, 200-year trends and stuff like that within a couple weeks or a couple months. They take way, way longer than people think for them to play out. So XAU, XAZ, gold to silver. We are still broken out of our two resistances here, showing some weakness. That means silver is staying strong in comparison to gold. I still think we're going to come back down here and retest that 65 gold-silver ratio. We got the hard sell. We're losing the slope line. We could very easily just break down from here, and I was wrong. But if we find some support right here, I do still expect the move to the upside. I still expect a B wave, but maybe we just come down here, put in a new low. And again, I was wrong. I got to admit it if we do. I still like gold. I still like silver. Still think that gold looks stronger than silver long term. But according to this chart right now, I might be wrong because it just looks like we put in a high and then a low and then a lower high and we're rolling over. So if we take out this low, I would expect it to come back down here to like 64. If we do take out this high, I'll start looking for these targets up here that we had in place. But XPT platinum, you know, we got that breakdown, but found some support, showing some strength. It's going to have a tough time getting through all these moving averages back to the upside, getting back inside that range, inside that channel. But it does not mean that it's not going to happen. We broke down from a key level right here when we broke out of that yellow channel and broke out of that blue channel. I think there's a very good possibility we come up here, retest like 1200, and then it fails, and we roll over, and then we start seeing some of these like potential targets. I'm looking at platinum at $1,000. I'm interested at $1,000. If we get to 850, I'm still a buyer all day, but I'm really interested at like $1,000. Speaking of $1,000, lumber. We'll get there in a sec. USAS, gold and silver corp, still hanging out down here at that support. Hard buy. Bunch of green histograms in a row. Blue. I'm probably going to load up on this. I would really like to see it come up to like $1.80. I would rather buy at $1.80, showing some strength, than still below the 8 moving average where we're at right now. But again, I'm already in this position. So, you know, it's so far we're at our entry basically. Very nice upside potential. But in all actuality, I expect us to just chop around inside this triangle. So I'll be taking profits at the top of the triangle. If all of a sudden gold and silver start breaking out, this thing will probably look nice. If they start breaking down, this trade is probably going to fail. So ACB. All right, so we got a very nice follow through from our initial entry on Aurora Cannabis. I'm looking to load back up on all these pot stocks pretty much. We got like a 44% move. We're now still in profit, like over 30% on these trades. We're above all our moving averages, except for the 200 exponential. I think we will chop around here for a little bit. We'll get the hard sell signal here. Bunch of red histograms. I think we'll go sideways to down a little bit. And then I expect continuation to our initial target. But again, this looks stronger to me. The fact that it's like actually putting in a base and it's not just like gapping up. I like how this looks. I'm very confident in the cannabis trades. Tilray, same deal. Very nice entry point. Obviously, you know, we made it up as high as 50% up in this position. We are still up like 25%. I mean, you could have argued that that was like a nice scalp and took profits, but we didn't quite hit my initial target right here. I still have massive targets to the upside for Tilray. We could come back down as low as our entry and just get a second chance. Hard sell already printed here. A couple red histograms in a row. Blue slope line. I mean, again, I'm loading up my bags along the way on this. They look good. They look good. But again, if the markets all of a sudden just start crashing, I mean, these could easily dump down like 50%. Easily. But I just don't think that that's likely going to happen at this point in time. But if it does start showing weakness throughout like the overall indexes or whatever, it's not like you won't see me making videos. So I will keep you up to date. THCX, just slightly weaker version of those two. And then a little more diversified, but underperform. YOLO is the same thing too. I prefer THCX to YOLO, but YOLO gives a little bit more diversification out of the actual cannabis sector as well. A lot of resistance along the way, but chopping around above the moving averages. We did flip the parabolic SAR red. We do have a bunch of red histograms in a row. We do have, you know, leaving the bullish control zone. Potential hard sell signal printing soon. I'm not going to be like loading up on these. I already have a nice position in YOLO and THCX, giving me like a little bit of hedge into some of the other cannabis stuff. But ACB, Aurora, and Tilray, I like. Canopy Growth, I like. A couple other ones as well. So UEC, Uranium Energy Core. I mean, these uranium stocks look like they're topping. I've been saying it for a while now. I've been saying it for a while. You guys have heard me say it a bunch of times. There is a ton of, weakness in the chart. We just printed bearish divergence. This, I love uranium, but this trade was way too crowded. No one talked about uranium for 30 years, and now everyone's talking about uranium. So that's, check please. That's my exit. Uranium, URA, same thing. Massive bearish candle. Come down here. Maybe we find some support. I don't know. We'll wait and see how it develops. Again, bearish divergence. Higher high on price action. Same high on the indicator oscillator. Bearish divergence. I don't care if I love you or hate you. If I see divergence playing out in the chart, I'm going to tell you about it. I don't ignore signs because I like something and say, it can't be true because uranium. I don't do that. I use technicals and long-term fundamentals. CCJ, Cameco, same thing. Dumpy dump. And whoever bought the top, I mean, this thing just took out like weeks of price action to the upside. Could find support right here at the 50-55 moving averages. I mean, we really just got to wait and see, like, one candle retracement. And you're like, that's it. We're done. I'm buying in. More than likely, we see some kind of follow through. We see, the 821 start to cross. Maybe we get down to 89. Maybe we get down to like $17. Once these start to carve out a bottom on a longer time frame, I will be looking to load back up all my positions. Copper, at this point in time, let me turn off the moving averages. Copper has obviously got the 821 cross to the downside. Every other time that happened, it just chopped sideways and basically did like a bullish reset. We'll have to see what happens here. It is printing a potentially bullish signal, buy, sell, buy at support right here based on Fibonacci's, based on our previous high, based on the bottom of that channel. It's been living inside forever. So, but we got to be careful because our giant pattern from way back here, this huge W, we already got the measure move. The measure move played out. That was the trade to do way back when. It literally topped out perfectly. I would not be surprised to see CPER, the copper index, come down to like $24. Again, extremely overcrowded, but we'll have to see. I mean, I'm not saying we're going to break to the downside here. We could very easily find support and continue to the upside. But in the event that we did break to the downside, from this range, that puts us at like $22-25, or 22 to 22.50 rather. Just the measure move. But again, we could very easily see that same exact move, but to the upside if we get back to the top of the channel, in which case, this would be like the perfect entry off of the bottom of the channel. As every other time we touch the bottom of the channel, we bounce to the top of the channel. So, but I don't think we're really getting ready to break in one direction or the other. We'll have to see when we get there, but we've been operating inside this channel for so long. 37.50 would be like the target to the upside. We've been in this channel since March, over a year. So more than likely, what do? We probably bounce this channel and then continue back to the top of the channel or the middle of the channel. We'll have to see. I always trade support and resistance and don't expect them to break just randomly. Lithium showing some more strength here. But again, we're at the top of the range. We're very close to like topping out, at least temporarily. We need at least some kind of bullish reset. Lumber. Okay, look, everybody is on the lumber train now that it's been dumping. They were bullish here. They were bearish here. They were bullish here. They were bearish here. Now we're bullish here. I mean, look, we're breaking down hard. We're down below $1,000. You guys know where my target's at. Still down here at $800. There's going to be some serious lag in the market too, as all these companies have overpaid for all their lumber that they have, and no one's going to buy it at these prices, expecting that prices will come down. I heard some stuff about all different kinds of things. People are talking about, well, why don't they just sell the lumber at a loss? That's not how businesses work. You can't just drop your prices on lumber to sell all the lumber that you bought for like expensive prices so you can buy more lumber at cheap prices to sell that. What a smart company would do is like donate it to Habitat for Humanity or something, write it off at the extremely high prices that they paid for it, get full credit for it as far as tax incentives, and then they can buy their stock at cheaper prices. They don't take a loss. they get a tax deductible write-off, and then they can just sell a ton of lumber. Most people talking about all this stuff don't understand how actual businesses work. They don't understand profits and losses. We're probably going to be bottoming out here very soon, somewhere in between $840 and $940. We're very close to the 200 exponential and simple moving averages. Keep in mind, this is futures market, so we'll have to see. These things always get a little goofy towards expiration as well. So, Caterpillar. Okay, so look, this is exactly what we spoke about. This is exactly what we expected. There are literally no surprises here. We were operating inside of this ascending pattern for God knows how long. I spoke about how I thought we were topping out here at this key fib level. We had multiple divergence, bearish divergence after bearish divergence, 3 drives of bearish divergence at our support level, broke down from it. The measured move of the channel is $207. I am not going to be buying into this, jumping in a hurry, because when we break down from these channels, the last time we did this, we got the burst up, that burst right here, and then we sold off, and the total sell-off, like from the top to the initial bottom was 35%, to the bottom was 50%. The infrastructure trade was already priced in. This was all already priced in. The infrastructure package could take months, could take years. God knows if we'll even get it. They'll probably just like send people checks instead. Who knows? I mean, it's been so long since the United States did anything with infrastructure. The fact that they're talking about it is exciting, but let's be real. We're probably not going to do any infrastructure. And if we do, we'll probably like build daycares or something stupid because the government doesn't know how to spend money. 50% move from here would be $123. Do I think we go there? No, but I'm not just going to jump in at 10 or 15% down. I am definitely looking to get into Caterpillar as like a nice blue chip long, position, but not right now. I'm not going to pick the bottom on this after a parabolic move to the upside. John Deere, same thing, getting the 821 cross to the downside, looking like shit, breaking down from a key level, from that key area. This thing had been hanging out inside of the top of the channel, inside of the top 50% above the green heart line, like the entire way up, with only really like the one touch of the bottom right here. So breaking down here, I mean, again, I'm not looking to jump into this. Just the measure move alone is going to take us down here to like $250. It's another $100 haircut. This thing chopped sideways for like 2 years and did absolutely nothing before a sell-off. So the last thing I want to do is get into this thing before it sells off and then chop sideways for another like 2 to 5 years. So, but I'm paying attention to it. I will be watching them, updating you on them. Damn, we did it. We did it, guys. 53 minutes. Nailed it. Didn't even, my voice still feels good. I'm going to keep it short. I'm going to jump over in the comments, cut up with you guys for a minute, and then I'm going to get out of here. I was yelling way too much at the fights. They were extremely exciting. I can't believe Figueiredo got absolutely dominated. Adesanya looked good. There was never a moment that he did not look good. And Nate Diaz fight was extremely exciting. If that would have been a 3-round fight, Edwards would have looked like he dominated him. But in that 5th round, when Diaz caught him on the chin, he was literally like 1 or 2 slaps away from knocking Leon Edwards out with an open hand palm slap, which would have been hilarious. But I think, honestly, they did exactly, that fight did exactly what it was supposed to do. Edwards got to beat up a living meat bloody punching bag. Diaz got a couple nice strikes in, almost finished Edwards in the 5th round, which would have been just absolutely amazingly phenomenal. Everybody wins. That was a winner-winner fight, in my opinion. Winner-winner fight. Moreno looked fucking fantastic, though. I can't believe he just absolutely dominated Figueiredo. He literally threw like 2 strikes in the 1st round, and then, like, I don't know what happened. I think he froze up, and he just got absolutely dominated. Sean CZ, what's up, brother? Good to see you, my man. New Pathway, yo, yo, yo. Good to see you as well, brother. Broski in the house. You know it, my man. What is that? Man, what is that? Bikerides? I don't know. I'm not sure exactly how. It's tough with those ones that just got a bunch of letters in a row. Good evening to you as well, though, my man. You have to let me know how to pronounce that in the future. Tahid, good to see you as well. Yo, our kids, K Ritz in the house. Looking forward to another fantastic update. Hey, you got it, man. You got it quick and easy. Back to reality. Commander Corn says howdy. Should be a good one. It is, man. Short and sweet. Hopefully you guys enjoyed it. And Sean CZ says, in a situation like Cat, would you consider buying puts for the ride down? I mean, honestly, me personally, no, I don't love it. I don't know, man. It could go either way. It really could. You just never know when that thing is just going to have a reaction rally. After that much bearish sell-off and then an indecision candle at like a support level, I just wouldn't want to get caught on the wrong side of that position. I mean, again, it's only going to be like a 10% move back to the upside, and it could easily just draw down for months. And I really do think a lot of these trades are just, I think a lot of these things are just everybody piled into them and now they're failing. We're below the 21. My opinion, you wait and see if the 821 cross to the downside. I mean, look at how long we've been in the bullish control zone this entire run up here. If we break down from this level, if we get the 821 cross on the weekly and we break down from this level, we're leaving the bullish control zone. We're below the slope line now. I think after we get the reaction rally, you know there's going to be a bullish bounce. You know there's going to be a dead cat bounce, a reaction rally. You know people are going to step in and try to get on the value side after like a 10 or 20% sell-off. In my opinion, you know, buy puts or sell calls after that, but not before. I wouldn't want to do it and then all of a sudden you get a reaction rally and it just like melts your face immediately afterwards. Yeah, sell calls or buy puts after the bounce. I think in all reality, we're going to come back up here to like 230 or so and test it. But again, that's not financial advice. I'm not your financial advisor. This bearish divergence could play out. We could easily get the move back down to like 207. Find support at one of these key levels. But I would, if I'm not positioned before a move takes place, I very rarely will just jump into it expecting continuation. But again, that's just my opinion. But I also really like Cat long term. So even if I'm just not really looking. I'm really not looking to play with that right now. I'd rather just wait and see how it plays out. CW, yeah, definitely, man. Appreciate you showing up, guys. Quick little update. Yeah, normally I go a little longer. Appreciate the gratitude from you guys. KO's 93, good to see you. Peace out. And Commander Corn says, so did you close out your commodities and infrastructure positions or just take a little off the top, rebuy? How'd you play these tops? Yeah, I took profits in uranium. I didn't really mess around with my pot stocks. I'm just not a buyer in most of the industrial stuff right now or commodities. I've taken some profits along the way, but overall, man, like most of my positions, the truth is, as far as the commodities are concerned, I expect this really is the beginning of like a 10-year commodity bull market. So while it's nice to trim positions if you're limited on capital, like not to brag, but I'm having like the opposite problem right now. Rather than feeling limited on capital, because I trade, but I also invest. So I'm always looking to regularly add 2 positions somewhere. And you guys know from last week, I was having trouble finding places I'm looking to deploy my capital based on technicals. A lot of stuff was not looking good. Most stuff was looking like shit last week. So in all reality, it's sort of like the opposite. I'm having trouble finding opportunities to put money into the markets, especially at these levels. So I'm not as concerned with taking profits and ending up with more capital on the sidelines that I'm looking to deploy. It's sort of the opposite for me. I'm looking for nice charts and reliable places that I can diversify, but also place my capital. We're also coming up on, basically the end of the half / quarter, whatever. So it's rebalancing time as well. So I'm not as concerned with like little scalps and taking profits necessarily on stuff as, I'm very close to basically having to make some decisions regardless. So, but again, it's a completely different situation too, Commander Corn, depending on, if you're in just quick little scalp positions and then you want to put that capital somewhere else or you need that money to trade with versus, if that's going in like, like a IRA or something like that. You know what I mean? If you're throwing that money in an IRA, sure, you can trade it around or whatever. But in all reality, you know, you're looking for like long-term positions. So, and, you know, if we do get the dump, if we do finally top out, if rates do start going up and we see a big sell-off, I have plenty of capital on the sideline waiting to be deployed. But I have regular, you know, weekly amounts that I put into the market. So, and I'm having trouble finding where I want to put those recently. You know, we have really nice trades with, you know, the pot stocks looked great. We got them at a key level. That Coinbase trade's nice. That Bumble trade's nice. The uranium trades we got into are nice. You know, we're in a lot of nice positions from nice levels that probably won't be retested. But at the same time, you know, I'm looking at the opportunity of, we're expecting them to top out at least temporarily. And then I'm looking to add to those positions off of key support. Same with something like eBay, where I'm glad to see it going up like that. I'm glad to see it pulling back. But now I want to see, does that support hold? And then I'll take position into that, etc. So, and then also, you know, we'll get to see what's going on Wednesday. You know, we're going to see mass shifts and rebalancing taking place all over the place. We're still, you know, going off of last year and like, you know, the 1 year basically like long-term capital gains mark. We're still close to that area where we saw like a lot of capital deployed in things around roughly 1 year ago. So, you know, we're still going to see a lot of profit taking in stuff that people just waited for that 1 year mark. So I think we're going to see a lot of opportunity in these markets. I don't think that it's necessary to just rush into stuff here. I think that if we just stick to the plan, stick to trading plan, risk reward, you know, continue what we've been doing, I think it's going to keep working. I don't see any reason all of a sudden like what we've been doing is not going to just keep working. Been crushing it. It's been an absolutely phenomenal like year plus whatever. I don't expect anything to change in the near future. So, but yeah, I think that's going to call it for today. Like I said, keep it nice and short. Let my voice rest up. And then I will see you guys on Wednesday for our midweek market update. I do expect further upside potential on crypto. It is very potential. Like there's definitely potential now after a nice little move up for some sideways to down action. Overall, Bitcoin looks like it's going to be gaining strength in relation to altcoins. But we could easily see like an alt pop and then like they pop off for a minute and then, you know, bleed back into Bitcoin. But we'll have to see here. Appreciate it. Just curious to hear your thought process. Makes sense. Thanks as always. Yeah, for sure, man. And again, I try to leave like the analysis on here to like more mid to long term, just because I only do updates like every couple days. So, you know, if I'm doing like scalps or whatever, I can be in and out of a scalp in a few hours, a day, a few days, and I'm not trying to leave anybody hanging. But you guys know that this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I'll see y'all Wednesday. Appreciate the likes, support, all that stuff. I did not get back to all the people that messaged me about the group. I have all your emails flagged. I will get back to you this week, 100% for sure, and give everybody plenty of time to get in before the start of the month. And even if you don't join at the start of the month, that's fine too. You can like prorate it for 3 weeks or whatever the hell it is. It doesn't matter. So, yeah, appreciate you guys. Everybody have a good night. Crypto Trend Trade.